Hello and welcome to Portfolio Room podcast, where we explore the trends impacting private equity today. I'm Gleb Ismailov, private equity CFO specialist in Privatel. Excited to have our guest Andre. Good afternoon. Joining today, and Andre is the current CFO for Open Claims. Worked with Velocity, Gimv, Sequoia, Better Inventions, and many other private equity houses. More than 20 years of software experience in PE-backed companies. And today we are going to discuss private equity's demand for software in the times of economic instability. Andre?
Yes, thanks, Gleb, for inviting me for this podcast, and welcome everybody. Indeed, the CFO for quite some time already, over almost 30 years experience in finance, and almost the last 12 of 20 years indeed as a CFO. Worked, still at Open Claims as interim currently, started my company in 2018 to help startups and scale-ups with all kind of challenges they have in their growth phase, in their internalization, for instance, but also in the building a foundation for growth. Yeah. So seasoned business CFO, I would say.
So, Andre, I think for our audience will be very interesting to get your feeling about software sector, and you can see that software sector kept certainly well in terms of activity comparing to other sectors like healthcare and manufacturing. Especially in healthcare, we saw a big decrease of deal activity. And perhaps you can give an insight into how approach has changed about software. Is it still the same, or in terms of investors' interest?
Yeah, good one. Because I see quite some change. The general approach has swifted, I would say, from rapid growth to more sustainable business. And I mean, with sustainable business is more EBITDA positive focus and cash flow positive. And I think the example in the medtech, what you see is that there's a lot of money has to go in first to generate money, because you need to invest, you need to new products, but also potentially new medicines. So yeah, there's a general shift. Is a company in the short term more EBITDA positive and cash flow positive? Then there's a more focus on these types of companies. So the companies with a lot of which need a lot of money to invest and will be potentially EBITDA positive in the next over 2 or 3 years. That's not the focus. That's not the approach. Really short term EBITDA positive and cash flow positive. That's what you see. According to my opinion, what I see in the market right now.
Yep. I agree. This is also what I hear around the market in terms of from investors. And what do you think, in terms of inflation has risen a lot in the Benelux market and just in Europe in general? How do you think it's gonna also touch software and IT services industry?
Yeah, well, I think it will touch for definitely it will touch what you see first from the customer side. So the customers of the software industry, I think they increase or accelerate their investment in software, because I think software will take over the humankind, the human factor, and the human factor is expensive. It's more and more expensive, and I think there's the angle to inflation. Salaries has increased, personal cost has increased, so they accelerate their investments in software. So software companies, I think they do have business. They see business because companies are accelerating in automation. In order to basically save cost and focus on cost cutting, not cost cutting, but cost efficiency, would say that, but also efficiency in general. More automations mean more efficiency, and that's helping their business to grow, and not invest in personnel, which are definitely more expensive due to the inflation. So it affects it, but it has also swift from focus more in automation and more in efficiency with systems, with products like within Open Claims or others.
Yep. So you would say that for software business, it's not like the cost as more in human capitals, so like salaries, rather than like, let's say, fixed costs like rent or other like for example for manufacturing, right? For them, it's not just the salaries increased; it's also all the taxes, all the all the supply chain has increased. In software, you don't have to deal with this that much.
No, yeah, but that has that to do with inflation. It's more a focus what you see within which the other point within the industry, that they don't have offices anymore because it's not used anymore after COVID, the Corona period. You see a lot of people working from home or working hybrid. So I think that's in general a cost cutting exercise. Less cost because the office isn't used anymore in extension before COVID.
Yeah.
So of course inflation, increasing the cost, but I think that was more kind of part of it. They're also already focusing in cost cutting. But from more customer side, they want to automate because of inflation. For example, last year the inflation was about 10%. In many contracts, you see the inflation. Prices can be adjusted to the inflation ratio, which is a lot. 10% increase is serious. So I think they and if you increase your software cost by 10%, you're probably going to have less people because you basically want to reduce costs, and when your software goes up 10%, so somewhere it needs to go down with more than 10%.
I agree with you here. And from the also, in terms of PE software like investments, in terms of in the sector, because you've been there for a long time in this industry, what interesting trends you're seeing like in terms of software investments? Is it going to be more like next year, let's say, demand going to be more for B2B businesses or more like for B2C investments?
I would say still B2B, because in terms of money to invest, that's less than B2C. You see, B2C is a very strong competition. It's a very competitive market. You name them. It is competitive. There's a lot of marketing money should go in. So the stakes in B2C companies are much higher, my perspective, because you need to invest. You need to gain market share. So B2C, of course, B2B, of course, you want to gain market share as well. But the stakes, the money is less than in B2C. So I expect a swift to B2B, and also let's say the mid-sized private equity or VC companies, they definitely will focus on B2B, where the bigger firms, the bigger VCs with a lot of big funds, they might consolidate, want to go to B2C, but put there a lot of money in there. So in terms of money, I think it goes to B2C. In terms of numbers, it goes to B2B. I would say.
Yep, makes sense. Because I guess also the trend, right? The demand and the trend, like even in terms of economic instability, B2B trend will be more stable, I guess, than you see.
Yeah, definitely. Sure. Yeah, it's a more long-term business. I think B2C is a very short-term oriented. I would say, again, that's my opinion. B2C is more short-term oriented, focused business. Gain market share if you're marketer, then consolidate and being taken over or take over. Consolidation, and then at the end, either it's you're going to stock exchange, or it will be more strategic sell by another. So it's more volatile, I would say, that market in terms of movements in consolidation, in money put in, but also in selling your stake again. But also secondly, and then you see that in this this market where the delivery, the food delivery, it's very competitive. The gorillas, there's a lot of consolidation. It's so highly competitive, so much money has to be put in that you see that their companies stop working or stop existing or being taken over. But do they earn money? I don't know. I don't think so. So it's money intensive, I would say, that these markets, the B2C.
Yep. And in your opinion, also, which countries will become more attractive for private equity investments over, let's say, the 5 years? Will it be in terms of Benelux? Will it be Netherlands, Luxembourg, or Belgium? Because Netherlands is still the most popular one, right? But will this change?
Yeah, I don't have a glass ball to say no, but from point of view where I say, which city, country is able to attract workforce and to retain workforce, and I mean, is it an attractive market? Is first of all, is the scale up environment, is that existing? But from a point of view, is there housing? Is there, tax related? I think definitely that's I think need to sustain. I think we do have in the Netherlands quite a good system so far, but Belgium, I know, is starting with that as well. Luxembourg, I know a little bit less, but definitely they're working on that as well. So, it all depends on housing, the cost of living, how much expect. What I definitely see happening is a swift from cities. Amsterdam was or maybe still is a hub for technology, for scale up startups. But that might shift. Rotterdam is increasing, I know, but even other cities might be attractive because of housing and also the cost of living. So it might be that, that move to Belgium, but in Belgium, it may be not Antwerp or Brussels, but smaller cities. And same in Luxembourg. So it's difficult to say, but if I have to appoint a country, I would say the Netherlands. But sure, a big runner-up is Belgium. Luxembourg, it's a small city. It's a small country. It's almost a big city, I would say. Housing, is that available? What's the cost of living there? For me, hard to say. So yeah, that's my opinion.
Sure. And what do you think then will be, in terms of regulation? Because I'm sure that you heard and saw that regulatory hurdles affected healthcare industry a lot in terms of revenue margin. Do you think this also applies to software companies, and is it an issue?
From my experience, I didn't face a lot of hurdles, regulatory hurdles so far. And so didn't affect the business or delayed the business, I would say. I can imagine in medtech it's a little bit difficult, and even in the food tech, I would say there it's about food and medicines and medical devices. That's different. So, but in software, I would say there aren't hurdles. But what I do believe that we're going to face some hurdles, especially with the artificial intelligence coming in, entering with a high speed software companies. I think there we're going to see hurdles. We're going to see regulatory hurdles because the European Union is looking also on potential regulations because and I think that's a simple question: what's fake or real? You see a lot right now, So I think it's good to have regulations there. Does it impact software business? Yes, I think it will impact software business. So does it hurt it? I don't know, but definitely it might delay things, or it might change the planning of development. That definitely will happen. And I think, from my point, I think it's good that that's happening because we want to stay in a world where we believe things, or what we see is true. But I think we are on an edge where things are getting a little bit blurry. And deep down, nobody wants that. That is you have to ask yourself: is it fake or is it real? That's a new question which is coming up, which is a little bit unknown for everybody, and also scary as well, in my opinion. So I think for now, I don't see any hurdles. I think from my point of view, the regulations and even the subsidies are or the support, the financial support from the government are helping the businesses, but I think there will come regulations for sure.
Yep. I see. That's.
But and to add, Gleb, it will be a common or a common regulation. So not only from the government, but also companies, software companies should be involved. They need to, they need to take their responsibility. And I think that's something which is out there for a long time. The social networks, they should take responsibility what's out there on their networks. But I think companies in AI also should take their responsibility, and for sure, they, seriously, they need to take their responsibility.
Indeed, I think now is the perfect time, as you said, that for the companies and the government and the community to cooperate together. You can't be just as separate, especially in software, as you said, because AI, all of these technologies have a big effect on community. And if then,
Yeah, true.
if they're not going to be, if they're not going to be in conversation with the government, it can lead to disasters, actually. So.
Absolutely, I totally agree on that.
And in terms of also M&A activity, deal activity, just your opinion as a CFO, do you think it's more, it's better and makes sense to buy a competitor, or rather just concentrate on organic growth and build the company? What is more successful in your experience?
I don't have a clear answer on that, to be honest. It's depending case by case. If you want to enter a new market, international, from my experience, if the entry to barrier, the cost of to enter that market is very high, I would say take over a competition. And then particularly in that market you're looking for, because that goes quicker. You have customers already. For instance, Germany. I know Germany well. Having customers there takes a while. It takes at least an investment of a year. If you start from scratch, building a relationship, it's very important there. So, better to buy a company because you have customers and you have local knowledge and you have a local language as well. So, I would say yes. But in some cases, if it's a product which is more common and can even be steered out of the other country, and then maybe more B2C, or a product which is, it's low touch. You can buy it via internet. You go, by the web shop, whatever. Not B2C, but B2B. But quite transactional. Why should you buy a competition? Just spend a lot of marketing money, and you will gain market share for sure. So it's case by case. Both has their advantage, but depending on the stage, on what product you have, and the cost of entry, of a market or a region.
Yeah. And on this side, by the way, you mentioned, just wanted to ask at the question you mentioned, because you had experience working with German clients, as you said, and the Benelux as well. Would you say like it's because two regions are in Europe, right? But would you say that customers are way more different, like in terms of how you need to approach them, or it's kind of similar? Like
No, from my experience, it's kind of similar. Especially worked for a lot of in the enterprise sales. So the corporates, the multinationals, and they work exactly the same. Although they have more focus on automation, but they still have their processes, have all their departments you have to go through, you have to deal with. So no. And maybe more the mid-sized companies, the SMBs, yes, they change. They have the urge and they want to act quickly. They can decide more faster. But the corporates, definitely not.
I see. And also, I'm sure your answer to this will probably be yes, because you've been concentrating in software most of your experience. Would you consider software as a defensive, software sector as a defensive investments for private equity house investments?
And then for me, defensive, I see to stay ahead of the competition. Is that what you see? Defense, yes, definitely. Yeah, that's true. But also as a growth investment, because you want to grow, you want to gain more customers. Let the world see your product, how good it is, and so it is definitely also a growth investment. But yeah, you're right. Stay ahead of competition.
Yeah.
If you see the money, where I've seen, the funds we received as companies in the past, the several companies I worked for, half of it, maybe at least goes to development. So meaning stay ahead of competition, be better than the rest. So is that defensive? Yes. On the other hand, it's also, professionalize your product, make it better, and from there you grow.
Yep, I think I agree with you. Even like when I speak, with manufacturing CFOs or from other industries, that those who invest into tech, you can see that when they also look at new technologies, you can see that they definitely save costs increase their margins. So yeah, I agree with you that.
Exactly.
And as we can see
Yeah.
statistically wise as well from private equity, that
Yeah.
the profit hasn't fallen that much during even economic crisis in software.
True.
And
True. Yeah. Yeah. Yeah.
finally, just wanted to because you've been in this game for a long time. What would you say, for CFOs and for finance directors who are only starting, let's say, in the private equity world? What are three top must-do things, a CFO, finance director should do when joining a portfolio company?
Yeah, for sure. The first which came in my mind was transparent communication. Be open.
Hmm.
Communicate what you think is important for them, and even sometimes over communicate
Hmm.
because the investment company will push you back, say this is too much or this is too less.
Hmm.
So be open to that. Be transparent in communication. It might sometimes a little bit you're defensive
Yep.
when a PE starts, you might be a little bit defensive on what they want. No, but be open, be transparent, because they can help you finally if you have questions. Secondly, deliver on time,
Hmm.
and be realistic. Say, I can't make it right now, or next week, Friday, you'll have it. But deliver that on time, and doesn't say on a Thursday, the day before, I can't make it. Sorry, it will be a week later. No, deliver on time. So be realistic, be clear, and explain also why it's on a Friday or which day you're planning to deliver or
Hmm.
communicate. And then last but not least, for sure, and I think it touched a little bit on it, be vulnerable. Ask for help if you need something. What do they expect from you? What do they want to know? And ask them. And yeah, be in contact
Yep.
with them about what they expect and what you have to learn and where you can learn. So
Yep.
yeah, definitely important to be successful, I would
On
say.
the last point, you mean that, for example, always you mean in conversations with your investors, basically, overlooking them.
Absolutely, absolutely. But also push back if necessary. Can't do that now, right now. We don't do that, or we don't have that information. And I didn't know, or sorry, say even
Hmm.
sorry.
Yep.
Easier said than done, but yeah,
And,
be
And
vulnerable.
would
Absolutely.
you also put here, establish the good connection with CEO, right? I guess it's also very important for.
Yeah, to be, I even that is for me kind of given.
Mhm.
I think if you start somewhere as a CFO, you're recruited by mainly the CEO,
Mhm.
and there's already kind of good
Mhm.
relationship in terms of you fit to each other. You have your sparring partners,
Yep.
both sides, so it's kind of given. But you're right, definitely establish a strong relationship with the CEO because I think that is the number one priority for the private equity behind it, because they want a strong management team. They want good relations there. They want partnership.
Yeah,
Definitely, yes.
I
Good
agree.
point.
Good, Andre. Then thank you for your time. I knew, that this discussion will be filled with forward thinking and, great advices and great stories, which totally as well blown my expectations. And I really just wanted again to thank you for stopping by in our show, podcast. And I think our audience will get a lot from this, not just investors, but also, finance people who are just starting and looking their way to become a
Yeah.
CFO one day, from this tremendous discussion. So I really appreciate your time. Looking
Yeah.
forward to meet you
No
as
problem.
well,
Was
see you more in the future.
good to be on board
Sure.
for this time.
Thank you, Andre.
And thanks. Good luck with all the
Thank
podcasts.
you very
See
much.
you.
Bye bye.
Yeah. Bye.
Bye.